Greetings. Welcome to my weekend market recap, 16th December 2023. I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. In my trading, I combine the power of technical analysis with market analysis, deciding whether the market is bullish or bearish, and then what is my preferred trading direction within that market condition. Buying into strong sectors and industries, shorting into weak sectors and industries, and also buying only strong fundamental stocks and looking to short weak fundamental stocks. Lastly, sometimes even aligning seasonality with my trades. Because I try to align all these forces with my trades, they tend to be truly high probability trades. And the proof of the pudding is in eating. You may see how those trades work out in the public posts that I share on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. I have the habit of also going back to some of these trades, not selectively looking at only the profitable trades, but all the trades that I share without pick and choose, and explain how I would have or how I actually did enter, manage, and exit the trades. I will do the same thing today also. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades, just like only I am responsible for the outcome of my trades. Options trading can be risky, but it does not have to be. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. Is it suitable for me? Yes, it is, because I use the options in a manner that is not risky. I use options, but I avoid the risky aspects of options. I use only Q systems for making trading decisions. Q has multiple components. All the components run on the Metastock platform, and the technical analysis component runs on TradeStation as well. I will demonstrate, not complete demonstration, but I will use the live systems Q Global etc. on Metastock and Q Elite on TradeStation today as well. That was the last slide of the presentation. Now I don't explain everything about Q systems in these market recaps because that is not simply possible. If you are already familiar with Q terminology, that is great. If not, you may refer to the material that I have put together on my website superiorprofit.co to know what I am referring to. You may learn about the Q systems, about the Q products, and if you want to delve into the full detail, under the learning page you find everything to know about Q systems so that you may understand the systems that I am using in these market recaps. Before looking at the market today, let's have a look at some of the analysis I shared in the past week and see how they played out. Again, no pick and choose. And even before I start the analysis, you probably know from past experience that the analysis work out remarkably well, if I may say that. But we'll see that ourselves again today. I shared the analysis on my website and also on the X page or Twitter page, Superior Profit. Once again, this week, I could time the market perfectly. On December 14th, in the morning session, soon after the open, I tweeted this post. As of December 14, I am writing, last few weeks I had shared bullish trades. Now that the market has gone up, I am starting to book profit. One reason I am booking profit is that the market is overbought from QEdge's analytics. For example, as of yesterday's close, so this is actually just before the market open, right? So this snapshot is as of previous day's close, that is as of 13th December close. I'm sharing it on December 14 before the open. As of 13th December close, 46% of stocks are in the uppermost bucket in QEdge's bucket analysis, and the uppermost bucket represents stocks above upper Bollinger Band. Whenever this percentage hit 30 to 40%, it is overbought. I pause buying. Overbought conditions may stay for some time, of course. However, I wrote, for me, the right choice now is to book at least partial profit and apply a trailing stop on the remaining position. So I'm now talking not only about entering trades, I'm not entering new long trades as of market close 13th December, but I am now talking about managing trades, that is to book profit or book either full profit or book partial profit and apply trailing stop. So as of 13th December, that is Wednesday's close, we had 46% of S&P 1500 stocks in the uppermost bucket. How is it today? From Wednesday to Friday, what was the change? That percentage as of Friday's close has come to 30%. So that's a very big drop. 30% is still high. However, relative to 46%, it is a big drop. It is still overbought because the overbought level is 30 to 40% level, but it has come down a lot. What does it mean? In simple terms, it means that I timed the market perfectly in deciding not to buy any more and instead to book profit in my long positions. So this tweet was December 14 as of 13th market close. On December 13, I shared another post. And see how different ways can be used using Q techniques to enter a trade, either long position or short position. I was reluctant to buy stocks. That is what I said. However, this is December 13th, not at the close, in the morning session. December 13th, 10 a.m. I am sharing December 13th. That is Wednesday morning session. I am sharing about PFE, Pfizer. Pfizer had a very large gap down open in the daily chart. It in fact hit a 10-year low. So it was in the news. Based on that news flash that it is hitting 10-year low, it is reasonable to expect that some people may be exiting their long stock position, giving up, finally giving up. When it was coming down for all this time, they may still be holding, and when the news flash comes at 10-year low, they may give up. That's how many traders act. However, though the market overall was overbought, I have access to the Q systems, and this is what I saw on the monthly chart, not even weekly. On the monthly chart, it was near the very reliable Q trend line support. In the weekly also, it was near the very reliable trend line support. It was already at jump thrust low in monthly, even in weekly also, and at that time it was having big move down 3, of course at price extreme low. That pattern was there in all the time frames: jump thrust low, big move down 3 at price extreme low. I looked at its fundamentals. It pays a decent dividend, and when it opened with a large gap down at such a low price and news was flashing about it hitting 10-year low, the put options were extremely expensive. Note the price was near $26 at that time. So what did I share? The stock was down more than 9% near the open. However, on Q charts, it is near monthly and weekly memory trend line support. If you think the stock pays enough dividend yield, you may check that using Q Vital. I did. It had a decent dividend yield. Then shorting the put may be a way to trade it with the thought of buying the stock if assigned. That is important. If assigned, buy the stock. But I am not expecting it to be assigned. I am expecting it to hit my profit target. The put at strikes near the current price, that is 26, exploded in premium because of this large gap down and because of the news flash. Do you see a possible risk averse trade? Options can be risky, but I don't use them in a risky manner. So I presented this thought that do you see a possible risk averse trade here with a short put to buy the stock if assigned, not that I'm expecting it to be assigned. I saw that trade and I took it and I followed up with the result the very next day in one day. So 13th December, I shared the idea of shorting the put on Pfizer with the thought of buying the stock if assigned, but goal was to exit the trade with profit. What profit? 50% of max profit. That is the Q standard guideline. So in one day, again in the morning session, I am posting in Pfizer the memory trend lines held in both monthly and weekly. Here, this is as of the next day, 14th morning. The trend lines held, but I am already in the trade with shorting the put. Today, price went up after the open, and at the top of the price move, the short put option 26 strike, and I had used the 19th Jan expiry. 19th Jan 2024 expiry that already hit the 50% of max profit, where the Q technique suggests booking profit. I had a GTC profit booking order in place which was filled. Notice the interesting way, probably interesting to you, it is interesting and fun for me. I am able to trade Firstly, with confidence, without worrying about what the news is saying. I have my own systems and a techniques to use the systems in a risk averse manner. At the market level, I am thinking that market is overbought. I am not willing to buy. At the same time, when I saw a well-known stock like Pfizer gap down hugely, more than 9% at the open, and very importantly, capital A and D, and it was near monthly and weekly trend line support. I decided to short the put. That was a bullish trade, though the market was overbought, and I hit profit target on the Pfizer trade in one day. Whereas I mentioned, I think in the last market recap, I was holding 8 to 9 bullish stock positions, maybe long stock or maybe covered call, maybe short put positions. I exited, if I remember correctly, I exited I think all of them over Thursday and Friday. When I shared this tweet, 14th December, just before the market open, that was Thursday, I already booked profit in many of the stocks I was holding, just as I shared would be my approach, which would be Q guideline also. The right choice would be to book profit. And some of them I closed fully on Thursday, some of them I put trailing stop, and for some of them I used intraday charts to tighten the trailing stop. And by Friday's close, I closed all those positions I was holding earlier. Pfizer long position I entered during the week, that also was closed with a profit. And on Friday, I took a long position, interestingly. I don't know if I should share that long trade, but no problem. Let's continue with Twitter first. About market again. December 14, Thursday, very near the close, 3:47 p.m. All my times are in Eastern time zone time. So very near the close, Thursday, what am I writing? I'm showing a chart of RTY, that is the small cap futures, Russell 2000 futures. Small caps are, this is a weekly chart by the way, weekly chart. You can see here, Russell 2000 futures. Small caps are outperforming today IWM, which is the equivalent ETF. On Thursday, it was up by a massive 2.5%. That is a huge percentage gain for an index that has 2000 stocks. 15 minutes before the close, it had more than 2.5% gain. My question was, are you thinking of buying small caps before the close? If you are using Q methodology, you wouldn't, because it was right near trendline resistance in long-term weekly chart. See how beautifully I am using the trend lines. In case of Pfizer, when the stock dropped a lot, I am using the Q memory trendline support to short the put, also using the explosive volatility of options at that point. That was buying at the support. And for RTY or IWM, I am saying that because it is near trendline resistance in the long-term weekly chart, you may not want to buy small caps. That is the Q guidelines. What I did, in fact, I bought the contra ETF for IWM. There are a few. One is 1:1, one is powered up. I think 1:2 or 1:3 something. I bought the contra multiplier ETF just near the close, and I am very open about it. If I am sharing some analysis and that is associated with a trade, I place my trade first and then I share the analysis. It takes me a minute, maybe 30 seconds to snap the charts mark it and tweet it, maybe 1 minute, but I placed the trade first. And I was already long a contra ETF for IWM when I posted this analysis. How did IWM end up? This is as of Thursday's morning. Sorry, not Thursday morning, 3:47 p.m. Well, it's my morning in Thailand, but it is near the market close on Thursday. How did IWM close on Friday? Let's go to Q Elite on TradeStation. IWM also, not only the Russell futures, 2000 futures, but Russell 2000 ETF, IWM also had the trend line resistance, and in fact the resistance held on Friday. Price came down. Price came down with very high volume shown by the dot. However, the candle color didn't change, but that is fine. I entered the short trade 1 day ago on Thursday near the close using long position in contra multiplier ETF, and in fact on Friday when I saw that the color did not change, and I'm now coming into trade management. Entry was Thursday. On Friday the color of the daily candle did not change. It did not give me any trade setup on the short direction. I booked my profit, small profit, but I would be happy with that kind of profit every day. I closed the ETF long position, contra ETF, multiplier ETF. So I had a reasonable profit. It was a multiplier ETF. I booked that trade also. Discussing not only entering the trade now, but also how I managed it. Let's look at IWM chart now. Combine my tweets with the market analysis now. I always ask two questions. What is the direction? What is my preferred trading direction? We all know it is bullish. And my preferred trading direction can be very different from the instrument's direction. My preferred trading direction, looking at the weekly long-term trendline resistance and big enough distance to the nearby trendline support, my preferred trading direction is actually bearish. And it did come down with very high volume. So my preferred trading direction bearish, though the IWM direction is bullish. And remember the tweet was with RTY, the futures. We could look at that also. I don't want to go to the futures charts and also the ETF charts, and then there are indexes charts in the market recap to save time, but I do look at them. The weekly and daily both had the trendline resistance, and this is a long-term trendline resistance in the future symbol. See where I shorted IWM using contra ETF long position, right at the trendline resistance, right at the trendline resistance, and booked profit the next day, because next day Friday did not give me a bearish enough signal using the weekly daily at a glance charts. Now Thursday, let's come back to Thursday again. Thursday was very bullish for IWM, very bullish. Near the close, IWM RTY were up by 2.5%. That was a bullish day. What did I tweet on such a bullish day? Beautiful use of, if I remember correctly, trendline resistance, I think again. Yes, December 14, 4 minutes before close. Thursday, 4 minutes before close, a very bullish day. when IWM was up 2.5%. What am I sharing? A beautiful way of trading using Q systems. That is what I am sharing. Here is a stock where not buying near Q memory trendline resistance was the right decision. Once again, WTW came near weekly as well as daily trendline resistance, near. And then on Thursday, a very bullish day in the market, especially IWM, but overall market was also very bullish on Thursday. This fell heavily. Not only did it fall, it fell with a bearish flow, broke below trendline support, giving a proper Q breakdown short setup in daily. Prior to that, it was approaching jump thrust high, fell down with the parent of all bearish momentum signals, big move down 3 level, fell down with bearish pressure, came down with bearish release, fell with bearish reversal at price extreme high, fell with high volume. All these in daily, and just by looking at the color coding, you or I could read it in a matter of seconds. What about weekly? Came near trendline resistance, fell with a bear release signal, and as of Thursday's market near the close, it also had a bearish reversal in weekly. That was a breakdown short setup when the market was very bullish. On an overall bullish day today, this stock is giving a short setup at the very top near price extreme high. We saw that it fell sharply with large bearish momentum signals and reversals in weekly, daily. Everywhere it was bearish on a very bullish day in the market. What to do? If you are a disciplined trader, I am for the most part, we would short the stock, and I did exactly that. I relied on the Q systems, Q setups, so many bearish signals in weekly, daily, and the fact that the market was overbought and it was falling before the market started falling. That would be a weaker stock. And for beginning Q traders, you could read all those signals, setups, and patterns from the commentary that is available in Q Global. It showed we had a breakout short setup as well as a box short setup. Two setups on the same day, bullish day in the market, and we had a squeeze move, bearish pattern, also a fan out pattern. Good enough for me. Good enough if you are using Q systems to short the stock. That is what we would do and we should do, and I did. Shorted the stock using stocks. How did I manage the position? Let's look at the stock. WTW. I shorted the stock somewhere here. If you were watching the stock from near the market open, you could get a better price probably using real-time chart for entry. I used the daily chart for entry. I shorted when it was breaking below the trend line support. And I was aware that there was the uptrending yellow direction line near the lower boundary. Price fell on Friday, came very close to the lower boundary, and it started going up. What did I do? I used the intraday chart to tighten the stop. and that stop was hit. As it recovered, it is still a down day with very high volume, but it recovered, and because I tightened stop using intraday chart, this recovery triggered the stop, so I closed the trade with a profit. Why did I close the trade with a profit faster than I would usually do? Faster than usually I would do because why I made that comment, my average holding period may be 5 days for swing trades. You can check that for yourself using Q techniques what is the average holding period, and I wait for it to hit a support or resistance, support for short trade. Here it came to the lower boundary and I did not want to hold it beyond that. That was one reason. On hindsight, it worked out perfectly, but I didn't know the future. Of course, none of us knows the future. I relied on the fact that it was already at the lower boundary, but I did not close the trade at that time. I just tightened the stop on intraday chart, knowing that if it falls more, my profit would continue to increase. But if it recovered from lower boundary, which is expected, that is why we have the lower boundaries on the chart, I would come out with a reasonable profit. There are few reasons why I came to this question, that why did I exit? Not only because it was near the lower boundary, at the lower boundary, there were few more reasons. One was that yes, I entered it perfectly using the breakdown short setup. It was confirming the setup at the close, but the stop was not to my liking. Stop was very far away. Did I increase risk in the trade? No. Why? Because I sized my position so that my dollar risk amount is same in all swing trades, or about the same in all. I sized it, but still I did not like this very large distance from my entry point to the stop loss. That was another reason I closed the trade without waiting. And remember, of course, the important point is that it came to the lower boundary. Now, let me also go a bit more into this trade. What I usually say, I am not a big fan of breakout trades or breakdown trades unless the stop is nearby. This was a breakdown setup. This was also a box setup, but not a trade where the stop was nearby. That was one reason I did not want to give much leeway to the stock, and I closed the trade with a profit. How beautifully I used the trendline support, isn't it, in Pfizer to buy when everybody was probably scared. Most of them, there may be few more people like me. How beautifully I used the trendline resistance in RTY to short IWM with contra ETF long position, and again using trendline resistance in weekly daily and the breakdown from trendline support. So in this case, see, Pfizer I used only trendline support. RTY I used trendline resistance, but if I go back to this post WTW, I used the trendline resistance in the original post and also the trendline support. They help me decide precisely what to do with confidence, and actually going very much against the market on Thursday, close that trade also with a profit. And I sometimes make a claim that my success rate in swing trading is higher than many other trades. This is the only proof of that, and this is the only proof of that is required as well. Why I say that is because the ideas, and I didn't pick and choose again, I went through every tweet that I shared this week, and that involve trades, and they all worked out beautifully. What about the trades that I shared 1 week ago? Yes, let's spend some time reviewing the trades. That is also a way to see how Q is working. Market, I will come back. Two trades I shared in the last market recap. One was REPX. As of this day, Friday. 1 week ago in the market recap, this is one trade I shared that was a bullish flow trade. Remember, I mentioned this was one of those special cases of flow setup where it is not in a trend following state. It is not a uptrending state at that time, but flow setup tries to anticipate when the direction may be changing, and that was that exceptional case came here also. Also, this was a setup that could be taken with the principle of taking a long on the first bullish flow signal day after a bullish headwind day if the stop loss was not far. So I shared this as a bullish setup. I took the long trade. Stop I would put below the trend line support. It didn't touch, didn't close below that, didn't touch also. Then it went up. On Friday near the high, I had large enough profit and I was not very positive on the market from Thursday's post itself because it was too overbought. So I exited the trade. How did I exit the trade? I didn't just place a stop market or limit order. Again, I used the intraday chart to tighten my stop on Friday. That was hit. So REPX I closed with a profit. Again, explaining how I entered, not only that I shared in the last market recap, I am managing and exiting the trades. What I would like this stock to do, I would like it to pull back now, probably near or even touching one of these trend line supports and go up again. I would like to buy again using a proper trend following long setup. Remember, this setup was the exceptional case where the stock was not uptrending, but if now I have a higher low, that will be a flow setup in an uptrending stock. I'll be happy to buy that. And I don't need to actually create watch lists for that. It will come in Q systems as a flow setup stock that is also fundamentally very strong. So I don't worry about maintaining watch lists. I'll easily find the stock in a few minutes, just like I found it last time in a live market recap, just like I found WTW, just like I found IWM. The only other stock I shared in the last market recap was STR. Proof of the pudding is in eating. That was a trend reversal headwind long setup right on this day. I shared it 1 week ago. That was also using the trend line support. Stop would be just below the trend line support, below the recent low using the protection signal. Stop was never hit. It went up much more than the risk distance was taken, and I think this one I closed on Thursday itself. Profit was much more than the risk distance. There was no reason to use tightening of stock using the overbought condition of the market. I closed the trade using my preset orders. Usually I put profit booking order, GTC order, when I am buying stocks, and STR I traded using stocks. REPX also I traded in stocks. WTW I shared earlier, traded using stocks. Pfizer was short put. See, in this market, and I am often trading opposite to the market, as was in Pfizer, as well as WTW, I am able to make a decent profit in terms of success rate, percentage profit in the trades. And that is why I mention in whatever be the market condition. Remember, I am often trading opposite to the market. So whatever be the market condition, there is no reason to make Not no reason not to make some profit from that trade, from the market. So the trades worked out very well, market analysis worked out very well. What is my market view? I look at many angles again. Maybe I'll not spend so much time on global markets. Let's look at the other market ETFs. IWM we already saw, and I already stated without any ambiguity that my preferred trading direction is downward. Let's look at the other market ETFs. SPY, very bullish, no doubt about that. What it is showing in daily now is a cluster of indecision. One is important, multiple is even more cautionary. And we have a bearish headwind signal. No bearish headwind trade setup like we had in the long direction on STR. But now again look back. How in STR I caught the very low of a stock using the unique headwind reversal signal. And if I could do that, when the bearish headwind comes, I am cautious about buying. I am not going to buy now. And of course it is very overbought also. So cluster of bearish indecision, bearish headwind, there is no point, no reason actually for me to try to buy. But here I am not able to be bearish also. In case of IWM, I had trendline resistance from which price is coming down. I am willing to be bearish here because the candle shape is very indecisive both on Thursday, Friday, and the weekly is actually very bullish overall, I may say. Certainly in color, also in shape, and there is no trendline resistance, no watermark resistance. I am not so bearish. I'm not bullish also, so I will stand aside from SPY. Certainly not buy. Notice also that SPY closed below previous day's close. That's when the activity bar becomes red, volume bar, and it also closed with very high volume. Same was true for IWM. DIA. Why I referred today, I usually don't do that. Why I refer to the learning pages on Q website, Superior Profit website today is that we are at the top of the market. Some time ago, we were at the bottom of the market. Those are more difficult to trade than a standard trend following trend, standard gap setup. Those are easier to trade. Everybody trades them. Not that many people trade them with success, but many people know about them. But when we are at the extreme, before the reversal, before long uptrend happen, before the down move happens, how do we know? We actually come to know very well. Like again, just like this live session is showing, and that you will realize once you practice and first know about the cue. That's why I refer to those pages. Let's look at DIA. When we came here, in fact, I mentioned in that market recap that DIA was the easiest to buy because it had a bullish headwind and it was the only ETF at that time giving a big move up 3. All of a sudden, near jump thrust low, it also created a false downside breakout with bull release signal, bullish pressure. Near that market, I don't know exactly that. I think that the one market recap nearby I mentioned that was the easiest decision to buy among the market ETFs, and it had a huge rally. How huge rally? That can be seen from the stretch band indicator. Overbought, and I'm not going to go back to the other market ETFs. Overbought for the most number of days without a single this release signal in between. Huge rally. But it is also closest to jump thrust high. It did close lower on Friday with big volume again. However, relative to open, it closed higher. That is the most bullish of all the market ETFs we saw so far. Most bullish. DIA is more bullish than IWM, more bullish than SPY. So industrials, they are too overbought. I'm not going to buy. Least likely, I mean, for sure, not only likely, I'm not going to try to short industrials. I would rather try to short small caps. But we haven't looked at QQQ yet. Overbought. However, this is the only market ETF that has green activity bar. So it actually closed higher on Friday. This is the one I am least, I mean, never thinking of shorting QQQ. Not only because it closed higher on Friday, but also this is the one that has the trend line support very close. The only one market ETF. So market is very overbought and there is bearish headwind in SPY, but the only one I am willing to look for bearish trades in is IWM. That is from the external view. But that is not all. Maybe I'll skip the global markets today. Isn't it fun and interesting to look at the market using these colorful signals and actually come to a conclusion? We are yet to look at some more things before we come to a conclusion. So far, I have stated based on the external ETF view, futures would say the same. I am willing to short only IWM, which is very uptrending but at resistance. But let's look at dollar index. Look back again. Here it broke down below a triangle pattern. Right in this market recap, I mentioned that it could end up being a dead cat bounce. It hugged the low of the trend line support. The trend line support was somewhat like this. Hugged the low of the trend line support that in fact resulted in a dead cat bounce. But I mentioned that before the dead cat bounce, before the drop happened. And when we were here, I mentioned that I am continuing to be bearish on dollar because not only there were so many direction lines, I specifically more importantly than that, the trend line resistance. I rely on these trend lines a lot because they work very well. As you saw in case of IWM trade, WTW trade, Pfizer trade. And in fact, it came to the trend line resistance, fell again. Where did it stop? Right near the weekly and daily trend line support. So see again on Thursday market is up heavily. IWM up more than 2.5%, but I took a short trade in IWM using contra ETF long position, and I am also looking at dollar at the same time. It is near trend line support. How likely was it that dollar was simply going to break through the trend line supports one by one in daily weekly? Less likely. Possible? Yes. Likelihood? Less. I trade based on probabilities. So I had that in mind when I took the short trade in IWM at the very top on a very bullish day. Dollar in fact went up and the trend line resistance is some distance away. So I am not surprised if it goes up, but again, not only there are so many direction lines that are downtrending, very importantly, two trend line resistances are there. It will be unlikely that it will just pierce through those trend line resistances and direction lines. So it may go up somewhat. I am expecting, but again, I don't trade based on expectation. I trade based on actual setup, but I am expecting that it will come down again, and that may lead to the market recovery again. But again, those things are maybe those are not setups. I am just analyzing the market. In any case, using the trend line supports proximity helped me in deciding to take the short trade in IWM on Thursday, right at the close in IWM. And because dollar went up right from trend line support and there is some distance to the resistance line, I am expecting the market to be under pressure at least for some days more. After that, what will happen may depend on whether dollar is breaking to the upside or reversing downward again. Now, of course, dollar is only one factor, and that is one reason I don't rely too much on inter-market analysis. It's just one factor influencing the stock market. It is not everything. I'm looking at it, but it is not everything. I'm looking at the actual instrument to decide if that has a trade setup before trading. But dollar is telling me that market has less reason, or for me at least, I have less reason to be bullish on the market, but I'm not going to short anything so far as we have seen other than IWM. That is at market level, small cap. Now let's look at the beautiful and very effective market breadth. So far we are at market external level. Now let's look at the beautiful, for me beautiful in trading has to be profitable, the USA market breadth total view. And for last couple of market recaps, I had been saying that and showing, not just saying, showing the percentage of stocks above 50 MA was approaching, was approaching the overbought level. Now it is at overbought level. I can't say it is approaching. It is actually at overbought level. And we had a buy everything, even those of not value on Thursday. Thanks to Mr. Ian Woodward, may him rest in peace. And we are at 3-month new high low overbought level. And on Friday, we had this magenta color in the candle. That is a phoenix symbol. That is a bearish breadth symbol. Again, thanks to Mr. Ian Woodward. May him rest in peace. Haven't met him, never attended any class. He was in the USA, I was in Asia mostly. Sometimes I lived in the USA, but I never knew about him at that time. But I have high respect from him because of the stories I have heard about him from others, and because, equally importantly, how these signals have helped me. Buy everything, even those of not value, euphoria. Very next day, bearish breadth signal, Phoenix. When Phoenix comes near the market bottom, I am looking to buy using an Eureka or accumulation sign. When Phoenix comes near the market top, I am looking to short. What more to read in this chart? You know, the master classes have a lot of detail. That's why I refer to those pages. This new high, new low percentage, whenever it hits the threshold, it shows the alert. That's why these vertical lines come up. Don't know how many of you actually remember all these things. I think all the Q traders have gone through those videos, the masterclass video, but don't know if you remember. These vertical lines are actually alerting that it is too oversold here, and here it is telling it is too overbought. And then we had Bango, we had Phoenix. Less reason to buy. Do I have any short setup here? No. So I'm not saying that overall market breadth total view internal health check has any bearish signal. No, but it has too many overbought signal that I am reluctant to buy. Look at the growth versus value. When it was here, I mentioned that I am watching to see if growth starts to outperform. It did not. Growth is continuing to maybe equal perform, maybe slightly underperform value. Whereas small caps were going up and it is still going up. So I was watching to see if small cap growth starts to gain strength. That did not. Small cap did, but growth did not. That is not bullish for the market. Can it happen next week? growth go up, break this kind of triangle pattern or channel, and small cap continues to go up, I think that is less likely based on what we saw in dollar index, based on the breadth signals, the overbought signals everywhere. This is the market breadth total view. I didn't actually look at it using weekly daily. The candle chart is a custom index of indexes. This is very broad. Let's look at the weekly, daily at a glance. And when I look at it using at a glance, I have more cautionary signal. Again, doing it in live. One, indecision is important. Indecision cluster, more important, nearing jump thrust high, very overbought, extreme price high, came down on Friday with extreme high volume. Is it bearish? No. Is it too risky to buy? Yes. Now we looked at total view. Let's now look at the exchanges. Nasdaq versus NYSE. NYSE I showed in the previous market recap itself that was more overbought from multiple angles, from the 3-month new high low, 50-day moving average, and we had a Bango earlier in NYSE, but not in Nasdaq at that time. No, Bango, the yellow line was not near the overbought level, not even now, but something else has changed. The 3-month new high low has now hit overbought in both NYSE Nasdaq. NYSE was already overbought earlier. Nasdaq has also been overbought. And now we see, drilling down in from total view to NYSE Nasdaq, that this buy everything, even those of not value, thanks to Mr. Ian Woodward, didn't come only in NYSE but came in Nasdaq also. Not a bullish sign. Yes, market went up, but for me that is not a time to buy. And now we also see the Phoenix came in NYSE. And that was likely probably because NYSE was more overbought before Nasdaq, and so the Phoenix came in NYSE. Let's also now is the time to make the best use of all the market analysis because it is at extremely high level. So let's look at the major indexes also using Q Global Market Breadth. For a long time, I was showing that Russell 2000 was not hitting the overbought level in percentage of stocks above 50-day MA or in 3-month new high low, or both together. It wasn't, but that is not true now. Now Russell 2000 also has become overbought along with all the other major indexes across the board. No reason for me to buy. Of course, there were exceptions like Pfizer, and on Friday I did buy a stock, but I don't want to probably mention the stock in public session because that was a valid trade also, but maybe not so valid in some ways. Actually, okay, let me share. That was a high dividend paying stock, very high dividend paying stock. So even if the stock goes up, I have nothing much to worry. On top of that, that stock, I used covered call. So not only do I have very high dividend, I have extra dividend like income from the short call position. So it was a very safe trade for me, and I did take a long position in a high dividend paying stock with very strong fundamentals, great earnings quality, checked all those from Q Vital, and then I used covered call. So that was a good trade also, I think. It was a good trade. The result doesn't matter. Okay. So the major market breadth, the index is also telling me not to buy. Russell 2000 has also become overbought now. We looked at bucket analysis earlier. Now let's look at QAG's sector industry stock advance decline from 1 month to 1 day. all across the board bullish, but on Friday very bearish. That is the perfect day to start looking to short trades. That's the perfect day. So far, this is the one indication I'm seeing. Friday's close or maybe Monday morning would be the best time to look for lucrative shorts. There are many overvalued stock, many weak fundamental stocks at price extreme high because of the euphoria in recent days. Those would be beautiful shorting candidates. WTW was only one weak fundamental stock. There are many more at high price level. So Q edge is telling me it is the perfect time to short. Is the market bearish? No. 5-day is very bullish, but in a bullish market, I am looking for bearish trades like I did in IWM, like I did it in WTW because the market is too overbought. And will technical breadth tell the same story? The weekly interval using Q Finder is very bullish across the board. There is not enough any bearish signal from the weekly headwind. But what about daily? Let's spend some time. Not only bearish across the board, all setups, trend continuation setups, reversal setups, everything bearish. Not only that, look at this percentage. For last several market recaps, I was showing this and mentioning market still has more room to go probably because in terms of technical breadth, it was not overbought. Though SPY was overbought, though QQQ DIA was overbought, the percentage of stocks that were giving bullish signals, they were mostly in the yellow area. So technical breadth from that angle was not over. What did it really mean, that sentence that I just made? That meant there were bullish signals in stocks that were at a lower price level, not only at price extreme high. But now I see majority of the bullish signals came in stocks that are already at price extreme high. So from that angle also, it is now overbought. Not only that. In the daily interval, the headwind bearish side has flashed the alert level. The alert level is shown by the red, this red, sometimes the green. Too many bearish headwinds. And what is headwind? A unique reversal signal that comes at the very top. Good enough reason not to buy. Also the red candle high, another reversal signal that comes at a very high level. This is a signal that is available in HGSI platform. This may not be 100% replication, exact replication of that, but this similar to the red candle high in HGSI platform. But here not only it shows for individual stocks, it has the breadth inside. It has hit the threshold level. That's why this cell is lit up. So when you see something is lit up in this panel dashboard, you know that is alerting us. So too many red candle high has come, and Mr. John once mentioned to me, one red candle high is important. When too many comes, take special note of that. I have an easy way to take note of that. Not only that, jump thrust high, Q signal, when it hits an alert level, the cell lights up here. Too many stocks are at jump thrust high, and in that condition we have too much bearishness. Perfect time in fact to look for short trades. Now we saw, I think I am past 1 hour, but I may not look for trade setups. You have the Q systems probably, and you may look at that. The market view is most important. This is not a market I'd like to buy. Now we did see that QQQ was actually up on Friday. So it is probably useful to look at why it is up. Let's look at NDX, or that's the index for QQQ. How was it on Friday? And using Q index, that's the logical program part of the same Vital Excel. This is NDX constituent analysis. QQQ constituent, I'm doing it in real time, any time of the day. 1 month very bullish, 10 days very bullish, 5 days very bullish, 2 days bullish, but see how beautifully it is showing the bullishness of QQQ is reducing, and on Friday, yes, it is slightly more bullish, but it is very mixed, almost neutral, you may say. That is not showing up in the strength of QQQ on the candle chart. Why so? Because QQQ or NDX is heavily influenced by the mega caps. Mega caps outperformed on Friday. That is why the constituent stocks didn't do that much better, but QQQ did quite well. And therefore, we may look at the mega cap custom index in Q Global. Indeed, it did well on Friday. And mega caps, this custom index has a trend line support very close to it. You saw QQQ has a trend line support but not so close to it, and this is what I mentioned in the previous market recap. See how they flow from 1 week to next week, how the Q signals play out. I mentioned in the last market recap, if the mega cap custom index trend line support is broken and if the QQQ support is broken, I would be very happy to short technology stocks, mega cap stocks, QQQ constituent. Did not happen. I have the same view. And now we see NDX was up, or QQQ was up on Friday. That was largely due to the mega caps. Doesn't give enough confidence to buy because mega caps. Let's go back to this chart. Mega cap is at price extreme high. Let's look at it using weekly daily at a glance. It is also at a watermark resistance in weekly, watermark resistance in daily, at which level cluster of bearish indecision had come earlier, price had fallen down from there. Nothing in this at a glance is telling me that yes, mega caps are outperforming, but it is time to buy. What would be the time to buy? Maybe after this pullback when it started to go up. When it started to go up, we could look at individual mega cap stocks. Not now when it is at so many resistances and when it is at price extreme high and when the market is looking weak suddenly starting from Friday. Are there bearish setups? Plenty, but I'll not go through them. This session is not to find trades. I think I share enough live trades anyway through different mechanisms. If I go to Q Finder, there are 212 stocks I could find short trades in. And if I look for stocks at price extreme high, I use this paintbrush, I still have 38 stocks to look at. I have plenty of shorting opportunities. It may be good idea to note some of them and see how they are doing on Monday. If they are coming down, if fundamentals are weak, if the industries are also weak, I think they will not. I think they will surely give low risk shorting opportunities. Why low risk? Because they are at price extreme high. You or I can try to short the top with narrow stop loss. All the examples I share in these YouTube sessions through Twitter, through my forum, they are always before knowing the results and they tend to work out quite well. I will continue to share them going forward. Thanks to all of you for joining. I look forward to seeing you in our next session, most likely next weekend. Have a great weekend, and as I always say, as these live sessions show, there is no reason not to do that. Trade profitably and enjoy trading, not only for profit but for its stimulation also, while managing risk. Of course, stimulation without managing risk is going to be harmful for sure. I think that is one certain thing in trading. One thing that is certain is if you don't manage risk, it will not end well. Whatever be the system, strategy techniques you are using. Risk must be managed, and if you manage risk, I think there is no reason not to trade profitably. I hope you do that. Thank you. See you again.